and welcome to all of you. We're at 300 participants, so that's quite impressive. Thanks for joining us. Let me first introduce the speakers here. You see them, some have prettier pictures than me. There's first of all myself, Achim Pross. I am I have to practice this, the acting deputy director. I think we also have with us Kalale, who's a project manager and the tax inspectors without borders here. We have Manuel, who probably needs no introduction for the people listening in. He is Mr. B, not Mr. Bean, Mr. B. And then we have Deborah, who is doing a lot of the work behind the scene, also on the pricing. So that's the people from whom you will be hearing here today on Amount B. We have released the document, I understand, about an hour ago. I am sure you have all read it, but we wanted to also tell you a little bit that will help you understand what you find in the document itself. So if we can go to the next slide, you see a little how we're going to break this down. So I think I'm going to talk about some context and give you some introduction. I then hand over to Kalale that will talk through the challenges for business and administrations and the current environment of what we're trying to do in the space of Amount B. I think we then get Manuel, who gives us an overview of the Amount B consultation document itself. And then we turn to Amount B pricing solution. And that's Deborah that will take you through where we are in the pricing, how far we've gone. And I think what we all try to do when we go beyond the context is to focus on the particular aspects where I think we very much appreciated to get particular input, where we are, some of the questions that countries have as we move this forward. Then I think it's back to me. We'll do next steps, including, of course, the date for the closure of comments, but also beyond some of the other things that we want to talk about. And then we have, depending on the time, also some time for Q&A. And I think Hazel has just explained how this works. So then let me, since I have the floor, I love this, so I can continue talking for as long as I like. I talk you through a little bit introduction and context. I think that's on the next slide. I mean, we originally wanted to release this, of course, on December 6th. It's a better day. It's the festive season. So hopefully you see this as a contribution to the festive season. Of course, we do recognize that that is a consultation also over the festive season, but that's also why we've given you, for different parts of the world, in particular important in the Southern Hemisphere, there is vacation, so that we have given you, I think, until the 25th of January. I think also before going through what you see on the slide, I think this is an important part of the pillars, but it's equally an important part of our wider tax certainty agenda that we have talked about. And I'm sure you've all tuned in for the Tax Certainty Day some time ago, where we already covered that. And before, if you wish, that's always been our pillar 0. We've already worked on tax certainty, and we have taken tax certainty in the pillars, and we talked about this at Tax Certainty Day. And of course, here conceptually, Amount B, I guess, is an ideal situation, because with Amount B, what we really hope to achieve is to simplify the rules and make them applicable so that we don't even need to go into prevention, and certainly not resolution. So it's about having simple rules that I think countries and companies can apply, and countries and tax administrations with varying degrees of capacity. Now, this slide here, I think, just reminds us that Amount B didn't fall out of the sky. And for those that have been following the work that we do here at the Inclusive Framework, you may remember that we had the MOUs on low-risk distribution services in 2013. We had low value-adding intergroup services as part of BEPS 215. We then also accelerated some of the work and focused the work, and you may remember this, in the FTA Santiago communique about standardized benchmarks. And then we have taken it into the Amount B. So there's a long stream of work recognizing that there is a need for practical simplification, but still operating within the principles of the arm's length principle. And so I think that's recognized in the transfer pricing principle, as Manuel frequently reminds me, that there is also the simplicity, and administrative simplicity is an element that is in the guidelines themselves. And you see how we have tried over the years to advance that thinking, to reduce complexity, to reduce disputes, and make the application easier. I think maybe then, before I hand it over to Kalale, who will talk you through a bit what this issue looks like in different parts of the inclusive framework, what we see in MAP, what we see in different jurisdictions, the significance of this issue that appears across IF members. Maybe just 3 points I wanted to make on the consultation document itself to help perhaps frame some of the questions you might have. First, let me make a point about physical goods versus digital goods or digital services. I think there we are asking for input. We are asking for input on all aspects, but we're also asking for input here. And the question here is, digital goods, here's our methodology. Can this, and there's a question, for instance, around software, but take this question more widely. Can this methodology, do you think it could also be used for digital goods or digital services? Do we need adjustments if we were to do this, or do we actually need a different methodology? So delegates are looking for input on the question with the starting proposition. It is goods, but then what are the views of those that will be submitting comments in terms of, could this be adapted? Does it work? Does it not work? What sort of adjustments would be required? So do look at that part of the paper. Do look at the question that we have in there. Read the question broadly. This is something where delegates are interested in input. And I think everyone that is working on this is trying to have the broadest possible application of amount B. Again, within the constraints of the arm's length principle, we want to do this in the existing environment. But that is one point I wanted to highlight. The second point I wanted to highlight is the point around scoping. And there's a couple of dimensions, and Manuel will go in this more deeply. What is the balance between qualitative and quantitative? You know, is that the right balance? Do we need to move the balance? Is it that you think that, you know, there could also be, rather than an in and out, there could be an adjustment if some of the factors aren't met? And then when you do this, think about what adjustment this might have to the pricing methodology. Because the objective is also to have the simplicity of the pricing methodology. And the broader, of course, you might go in the scope, the more variance you might have in the pricing methodology. How do you come out on this? In a world where we wish to operate within the arm's length principle, and so we may have a limit to the degree of simplification that you would wish to see, or that we would be able to sustain within that framework. There's also a question of baseline, and if you were to do outsourcing to third parties, what sort of level of risk? Is it a no risk? Is it a little risk? What is it inside that approach? And that's another one on which we're really looking forward to questions. And then third, and again, Manuel will go in this more deeply, exceptions to the application of amount B. Should there be exceptions? If you see exceptions, what exceptions would you see? What do you see as the main benefits if there were exceptions? Exceptions such as you have an internal cup, you have a cup, can you prove out of amount B? You know, those questions. What about local comparables? What about databases? What about commercially available databases? In those circumstances, I think there's a lot of interest amongst delegates to hear you on all of these questions. So do see this as a true consultation document where I think all of those that have worked very long, and you will hear from some tirelessly and with very little sleep, and that's not just the secretariat, more importantly, that's delegate. I think the attempt really is to make this as widely applicable and useful for tax administration and for taxpayers. And of course, as you know, importantly, it is also not subject to the scope restrictions that we see on amount A. So with this, let me hand it over to Kalale, who will talk you through the next part.
Thank you very much, Akim, and greetings to everybody that has joined us. So as Akim has mentioned, I'm going to spend the next few minutes just discussing some of the challenges that businesses and inclusive framework members have experienced in the current business and economic environment. And these challenges that I will address, that I will look at, will speak to the challenges that we see both in developed countries as well as developing countries. Then I'll move on to discussing how the rules that are being developed under Amount B are looking to address these challenges. So as you know from the October statement, the over 130 countries that agreed agreed that the scope of amount we is going to address is basically we're looking to simplify the application of the rules, the transfer pricing rules to marketing and distribution activities. And you might wonder why distribution activities. And as you know, distribution is an integral and very important factor to any business, multinationals, and just generally any business, if they're going to realize any value from the sale of goods and services which they're trading in. So the distribution function, however, can be quite complex. You know, we have distributors who are distributing as wholesalers, retailers. We have what has been called fully fledged distributors, high risk distributors, and low risk distributors. So the functions surrounding distribution and, you know, these entities that are carrying out these functions, the distribution functions, both, you know, whether it's in developed countries or developing countries, have this complexity that is attached to them. And so this complexity has brought about multiple transfer pricing disputes. So what you find is that taxpayers and tax administrations had, you know, there's a lot of disputes surrounding, they're disagreeing with regards to, you know, the functions that are being performed by these distributors, the risks that are being assumed by these distributors, what level of risk do we have? You know, what functions are there, you know, to what extent is the distributor actually performing these functions? And we see that all of this has led to multiple transfer pricing disputes. And so the disputes are very much linked to the delineation of the transaction. This is where now we talk about, you know, the actual functions of these distributors, but as well as the pricing. So even when taxpayers and tax administrations are able to agree on, say, are able to agree on the delineation of the actual transaction, the pricing then becomes an issue. What transfer pricing method should then be applicable? And then moving on from there is, are there any suitable comparables that could inform the adjustment of this particular you know, this particular transaction, for example? And in the case of developed countries, that takes on a new meaning, because it's not a case of, is this comparable suitable, but, you know, there are just no comparables sometimes that are available locally in a particular jurisdiction. So all of these issues then bring up these challenges that Amount B is looking to address. Another issue would be comparability adjustments. So for example, if there is any adjustment to a distributor's transaction by a tax administration, you know, what comparability adjustment are they looking to perform? And also, you know, to what extent do they perform that comparability adjustment? Could it be country risk adjustments, for example, and how would those be performed? So all of these issues bring about multiple disputes. And it is evident that these challenges are present everywhere. These are challenges that you see in, you know, inclusive framework member countries that are in developed countries, but also the ones that are in developing countries. And so we have data that actually speaks to this. And what you see on the screen right now is data that actually shows, you know, the transfer pricing disputes that we do have, because we can see this being admitted into MAP for developed countries. So the data, the MAP statistics actually show that, you know, the cases that have been admitted into MAP from 2016 to 2021 and have increased by over 33%. And we see that it takes a very long time to resolve transfer pricing disputes. We see that there's an average of about 32 months just to resolve the disputes. So you noticed I mentioned that this is data that shows the disputes that we have for developed countries. And this is because we have a low number of transfer pricing disputes that are being admitted into MAP by developing countries. So there are multiple reasons for this, which I can speak to because I've actually had the experience. I've actually had, you know, the experience of working in transfer pricing in a developing country. And part of this reason is that, you know, the taxpayers there are just not prone to evoke the MAP provisions. And as you know, a lot of developing countries do not actually have many, they don't have a large network of double taxation agreements. And some of the double taxation agreements are quite old. So what that means is that, you know, some of them do not actually have the MAP article. And in the past, we've also seen that tax administration in developing countries have not really handled very complex transfer pricing cases. And the reason for that has been due to low capacity, the lack of comparables, because of course, independent comparables, comparable transactions are supposed to inform any adjustments. And we also see that in the past, there has been a lack of enabling legislation in developing countries, particularly in some African countries. But obviously, we will see a change and a trend. We've seen it in the recent past, but as well, we know that we will continue to see this change. And the reason for this is that a lot of developing countries, the auditors there, the tax administrations are actually increasing the capacity. We've seen a lot of capacity increase, so which means that the tax administrations are able to take on more complex transfer pricing cases. They're able to handle more transfer pricing cases. And as you know, the more complex the transfer pricing case, the more, we would expect a bigger adjustment, which would prompt, admission into MAP when there is a dispute. And we've also seen that a lot of African countries now are renegotiating their old DTAs, both bilaterally and multilaterally. So we will see not only an increase in this, transfer pricing disputes, but a lot of them actually being admitted into MAP. So this tells us that we have an issue, both, with developing countries as well as developed countries when it comes to these, transfer pricing disputes, which are a lot of the times very much linked to the distribution functions or the distribution entities of multinationals. And so this is why the rules that are being developed under Amount A really are looking to address these challenges. So then how will Amount B address these challenges? So on the next slide, we will see that, the benefits of Amount B. So one of the key, features of Amount B is that it's going to have a clear scoping criteria for taxpayers. So this eliminates the disputes between tax administrations and taxpayers with regards to, the complexity of the functions that are being carried on, because entities will either be in scope of Amount B or out of scope. So then that reduces those disputes. And also Amount B is looking to have a pricing methodology. So there will be a clear indication of what transfer pricing method would then be applicable to entities that are falling in scope of Amount B. So then that also reduces a lot of the disputes that we do see, because there's so many disputes about, which transfer pricing method should actually be applied to a specific transaction. Another feature of Amount B is that when it comes to developing countries, we know, like particularly in Africa, something I've alluded to is that the issue is not that they're looking for suitable comparables, but sometimes that there are just no comparables. Another issue that developing countries' tax administration also face is that they just don't have the resources to be able to subscribe to some of these commercial databases that they can use to carry out their comparability analysis, their benchmarking exercises, and so on. So then Amount B then resolves that problem, because these companies, these tax administrations would then be able to use Amount B, to make this adjustment, and do not necessarily have to have a subscription to these, commercial databases. And, also the issue of comparables, lack of comparables will also be resolved. As you'd recall in the earlier slide, I had spoken about how long the transfer pricing disputes take to be resolved. What we'll also see is that the competent authorities take such a long time just discussing, how suitable the comparables are and all of that. So all of that discussion, the extensive discussions on the comparability, analysis or the benchmark analysis, the comparables that are being used would then be reduced, and hopefully we will see a reduction in how long these transfer pricing cases are taking to be resolved. So these are some of the benefits that we're definitely looking to get out of Amount B, and it's definitely something that I see personally as something that is definitely going to help with resolving a lot of these challenges. So over to you.
Okay, thank you very much, Kalali, and welcome everyone. Thanks for joining us today. So for the next few minutes, I'm gonna just walk you through the main elements of the consultation document, putting aside the big piece on pricing that will be covered by Deborah in a moment. But let me just start with the big question that we are supposed to answer through the consultation document. So it's like, what's amount B, how amount B is going to look like. I guess the short answer to that is that amount B is like a simplified solution to price in-country baseline marketing distribution activities in a manner that is consistent with the arm's length principle, as Achim was alluding to a minute ago. But now, when we get into transfer pricing, putting a price to baseline marketing and distribution activities often gets into somehow a repetitive approach, right? So we start with the delineation of the transaction, then we search for comparables, we review those comparables, then we determine the profit level indicator is appropriate, and so on and so forth. And we've seen, and Kalali has spoken to this quite extensively and clearly, that brings disputes to the table. So amount B needs to bring simplification in a manner that it's relatively easier as compared to what we have today, the application of the arm's length principle for in-scope transaction. And in that context, then amount B, the solution of amount B, will need to include first the scoping criteria that need to be as simple as possible to apply, and that will bring part of the tax certainty that will be delivered through amount B. Amount B will also include in the pricing methodology those commonly agreed benchmarking criteria to identify the potential comparables. It will also include the analysis of the relevant economic factors or the indicators of profitability, if you like, that will be used to place a given tested party within the arm's length range that will be provided by amount B. And finally, amount B will obviously need to give us an answer, right? What's the arm's length price of an in-scope transaction, and that price will need to be made publicly available, so there's full transparency on the amount B solution. So as I said, I think we can split the consultation document in two main pieces, one of them covering scope, another one covering price. So on scope, let me just start with paragraph 14, that, if I don't recall it badly, I think is the first paragraph we have in the consultation document about this topic. And paragraph 14 encapsulates an approach that should be familiar to all transfer pricing folks, and that's the transactional interpretation of the arm's length principle under the transfer pricing guidelines. So this paragraph basically intends to translate the inclusive framework statement that refers to in-country baseline marketing and distribution activities into a transactional approach that could eventually fit into the transfer pricing guidelines. And that means that translates into two different transactions under considerations for scope. Like the first one refers to buy and sell arrangements, and those are defined in the consultation document as scenarios where a tested party purchases goods from one or several associated parties and engages in wholesale distribution to unrelated customers, primarily in its local market. And I'll pick the point of primarily in a moment. But before that, let me also point out the second type of transactions that are covered in that paragraph 14, which refers to sales agency and commissioner arrangements. And here we have to recognize the document is less definitive and recognizes that the inclusion of this type of transactions in a scope is still under consideration. And therefore, the document recognizes on one hand, the importance, mostly from the perspective of low capacity jurisdictions, of including this type of arrangements, commissioners and sale agencies, in scope of amount B when they show similar features to buy-sell arrangements. But also the document acknowledges that there are ongoing discussions among delegates on whether such an inclusion would be appropriate and feasible, and if so, and this is a point that Achim was alluding to at the beginning, what are the aspects, what are the adjustments that we would need to make to the amount B pricing solution. So as you hear me speaking about this is clearly one of those elements regarding the scope of amount B, where inputs from commentators are going to be much welcome. Then the document moves on into the transfer pricing analysis of in-scope transaction. And I think the first message here is, again, like something very familiar to transfer pricing people, and is the usual message of labels will not drive the analysis of whether a transaction is in or out of scope. So rather, the document highlights the importance of the accurate delineation of the transaction, and for in-scope transactions, that delineation is going to be reflected in the scoping criteria that are captured in paragraph 18. So paragraph 18 of the document is like a critical one, including the scoping criteria. And as Achim said before, it includes a mix of qualitative and quantitative metrics. And here, the document, and in other parts of the document as well, tries to identify like the right balance, like that sweet spot between the ease of administration, which advises for the use of quantitative metrics derived mostly from financial statements, but also the need to remain consistent with the accurate delineation of the transaction as described in chapter 1 of the guidelines, that obviously requires some consideration of qualitative elements. So without being exhaustive on the elements covered in this paragraph 18 about scoping criteria, let me just highlight a couple of points where input from commentators will be very much appreciated. The first one refers to the degree of tolerance, if you like, that the document recognizes with regard to certain activities that could be perceived to go beyond in-country baseline marketing and distribution activities. I guess the importance of this discussion is clearly shown when we look at the treatment under the consultation document of, for instance, cross-border sales and the allowance of cross-border sales up to a de minimis threshold. It's also clear when we look at the disqualifying activities, such as, for instance, manufacturing, R&D, or financial activities, in a manner that if an entity otherwise in the scope of amount B would be undertaking this type of activities, the entity would be out of the scope of amount B. And finally, there is also like a question here in this degree of tolerance about, and it's an open discussion as well, and it's whether the performance of risk control functions that do not necessarily lead to the assumption of the economically significant risk under chapter 1 should imply that an entity is out of the scope of amount B, or rather those activities should not prevent an entity from falling in the scope of amount B. Again, these are like open questions where we need to find the right balance within the current guidance in the TPG, and again, like comments from the public, very much welcome. There is another point I'd like to highlight as well regarding paragraph 18, and that refers to a number of open questions on how the scoping criteria could be made more objective to enhance tax certainty and also to reduce potential subjectivity. Like, for instance, you'll see that there are specific questions looking for input on whether it's possible to define objectively if an entity assumes limited risks, or whether it's possible to define objectively whether an entity has limited ownership of certain assets. Then if we go on through the document, we'll get to the part dealing with potential exclusions that, as Achim said before, they're not carved out in stone at the moment, but rather they are put in document for discussion and to get inputs from you. There are probably 3 of them I'd like to touch upon today. Like the first one, which is probably like a technical one, refers to the interplay between amount B and alternative transfer pricing method. So, you know, Deborah will be speaking about that in a second, but given that amount B is premised on the application of the TNMM, the consultation document explores whether priority should be given to available taps or other traditional transaction methods when available, or on the contrary, whether the guidance in chapter 4, for instance, in the TPG, would allow for the maximum degree of simplification, and therefore amount B could be applied in all instances, regardless of whether other methods could be regarded as the most appropriate method for a particular case under Chapter 1 guidelines. Again, this is another element where the consultation document is trying to land in a balanced spot, trying to achieve that goal of simplification and tax certainty. Then there's an open discussion again regarding a potential exclusion related to the existence of local market compounds. And I guess if we step back for a second and we think about the amount B pricing solution as a whole, I think that solution will need to consider market-specific differences if, in the context of the economic analysis that we are undertaking, those market-specific features are found to have significant impact on the profitability of in-scope transactions. And there are like two different views of accommodating that reality, if you like, and the document recognizes both, right? So there is one view that considers that goal will be achieved only when local comps are given preference over a potential amount B solution. But there is another view that considers amount B could actually be designed through a comprehensive solution that recognizes country differences, and therefore an exception for local market comps would not be necessary. And finally, and Achim was alluding to this one at the opening, we have another potential exclusion from amount B that relates to to different types of products, which the document pins down to the distribution of commodities and the distribution of non-tangible goods. Again, open discussion where inputs from commentators will be very much welcome, not only on whether these limitations would have an impact on the inclusive framework delivering actually on the mandate, but also like in case those limitations were in place, what's the degree of such limitations? Like, for instance, if we think about potential exclusion of commodities, whether commodities should be defined in a narrow manner, like, for instance, in the way that we have a definition of commodities in 2.18 of the OECD transfer pricing guidelines, or rather that definition for the purposes of amount B should be considered more broadly. Finally, to wrap up the discussion on scope, the document includes then a series of more specific questions where inputs will be much welcome. Like, for instance, and again, Achim was kind of referring to this before, whether there are better ideas to craft the scoping criteria so it reduces the likelihood of disputes, or whether, for instance, folks think that the scoping of amount B should be expanded beyond wholesale to retail distribution, and if so, what adjustments should be considered in order to ensure that the amount B pricing methodology still delivers within the Amsterdam principle. And just let me finish with a word on documentation. You'll see that section 5 of the document refers to the documentation package of amount B. It outlines the benefits of having a consistent documentation package for both taxpayers and tax administrations. It includes a list of information that should be available for tax administrations, but the document is mindful of not overloading taxpayers with additional compliance burdens here. And therefore, you see that list of documentation builds mostly on information already available in the context of the local file and the master file described in Chapter 5 of the guidelines. And again, there is an open question regarding documentation where inputs are sought in order to double check with you whether that's the right level of documentation or whether a different approach should be considered in designing amount B. I think that's all what I had in terms of the overview of the consultation document. So now, Deborah, over to you.
Thanks, Manuel. Excuse me. So, talking to you about the amount B pricing solution. And this is the part of the amount B work that is looking at the pricing, so how we decide the price for a tested party that is in scope of amount B. But that also, some of that work feeds into the scoping questions. So I'm going to explain a little bit of what the pricing work is doing, some of the challenges we see around, as Manuel said, finding the balance between increasing the certainty by having a bigger scope, but then perhaps increasing the simplicity by having a narrower scope, and then progress. So it's already been said, current benchmarking practices, label intensive, potentially subjective. We see or we hear about a lot of disputes in this area, a lot of map cases in this area, a lot of effort by taxpayers and tax administrations going into benchmarking and discussing the benchmarking of individual cases. And what we're looking to do is to see if we can simplify that by reducing some of the repetition. So by not requiring all of this from scratch to be done for every single case that anyone is looking at. And the way that we're looking to do that to start with is to agree common benchmarking criteria. So to agree common search functions. This is a minimum that we think will help. If everyone's starting to look for their comparables in the same way, you start in the same place, you should end closer together. That's just the basic assumption for having common search criteria, common benchmarking criteria. And you can see some of the start of that process in the consultation document. And that's the very basics of how we started looking at common benchmarking criteria. But we do then start to get more sophisticated than that, and we start to tie in the simplification aspect a little bit more by looking for search criteria that we can use in line with the scope of a hypothetical baseline marketing transaction. And because we know roughly what that hypothetical baseline transaction is within certain variances of scope, we can do a search for those kind of businesses globally. So to find ourselves a comparator set or a potential comparator set globally of businesses that are doing that baseline activity. And then we can use that data for those businesses to try and find quantitative criteria that can be used for scoping amount B, and also to apply the pricing model for amount B. So to design a pricing model and to enable anyone using amount B to put their tested party somewhere in the range of potential prices for amount B scope activity. So we're using those initial search criteria, have used them to come up with a data set of these potentially comparable independent distributors. And initially it was a broad selection, and you can see that in the search criteria that are in the consultation document. And it was deliberately broad because we want to test which quantitative measures can be used as a proxy for the functions, assets, risks that we're looking to use to set the scope, to either scope people in or scope people out of amount B, but also to look at what the right return should be for those activities. So to make sure we're baseline enough wherever that scope comes out, we need to be able to investigate the correlation of individual factors to different profit levels over quite a broad data set. And then we are identifying economically relevant characteristics that do have a relationship to return or profit level. And they are at the firm level, but also at a jurisdictional or regional level. And that work is intended to investigate how much jurisdiction level factors make a difference to profit. So the intention is that by testing out quantitative measures and quantitative search criteria, we can improve the objectivity of the process, we can simplify the process, and we can add consistency. So that even if people are looking at using these common search criteria in individual cases, it's less resource intensive. There's less disputes because there's less subjectivity, and that all leads to increased certainty. There are some technical challenges associated with available data. And I'm sure almost everyone, if not everyone listening to this, is as up on these difficulties as we are, because you will come across them in individual cases just as we come across them looking for a global data set. So We have got a global data set. We have got it across all industries. And what we see by looking at a global data set is that there are differences in the availability of data points. So there's potentially differences in the calculation of data points in different databases by different accounting standards. Also, just different filing requirements. So some of the data is just not available for particular jurisdictions, and that makes this, it makes individual case-specific searches harder, but it makes this global data set potentially more difficult to apply more broadly. We have identified some factors that have a relationship to profit, both at a jurisdictional level or a jurisdictional level, but also at a firm level. We don't see a pattern across all geographical locations, and we don't see a pattern across all industries. But we do see some pattern in particular jurisdictions, particular industries, and we see a pattern with some underlying criteria that might be explaining differences in geography. We don't have enough of those factors yet to explain all of the differences that we see in profit levels. And this means that we can't identify a cause and effect from any of these factors yet. We continue to work on that. And of course, one of the issues that we have with data that we will overcome, but it would be really useful to get some input from you on this, is around making data available to underpin the Amount B solution. And we'll come to that. So we don't currently have sufficient explanatory power to underpin an answer that is completely mechanical. We can't say this criteria moving this way has this effect on profit. We can say that there's a relationship between some criteria, and we can use those criteria to potentially place a tested party in a range and to set a scope, but we can't have a black box answer at this stage because we don't have a regression model that explains all the differences. And that's probably not surprising given that the complexity, even in baseline marketing, of the population that we're looking at in terms of locations, industries. We have two working options at the moment, or two options that we're working on, but the door is not closed on any suggestions, but we have two models that we think are the way forward for this at the moment. We have a pricing matrix, and you can see a kind of figure for what this might look like in the consultation document. And this looks at using country and firm level indicators, which show a reliable relationship to the profit levels to place a tested party in the range of returns in an underlying population of comparators. And then we have potentially a more mechanical approach, which is that we calculate a price point from the whole set of comparators. And then we use those same indicators, references to those indicators that show a reliable relationship, to adjust the return from that starting point to be the correct one for any particular tested party, based on that tested party's financial indicators, both at the individual firm level and country level where necessary. So we are advanced in our thinking. We have identified some criteria that will be useful, that we can use for either of those models. We're working around agreeing the line, essentially, where certainty meets applicability of the scope. And there's absolutely some good information that you can give us to help with the pricing discussion on that. So general comments on the suggested solutions and for design architecture are very welcome. Observations of the arm's length results that you see and that you apply in your day-to-day work, and any supporting analysis or supporting data for those. And that includes suggestions for quantitative screens. So we're trying to, where we can, come up with reliable quantitative metrics as a simplification measure. We're very interested in your view on that. Anything that you can add on our data issues. So what's the minimum level of underlying data that you would need to be able to see in order to be able to rely on applying Amount B and also to fully consider the applicability of amount B, both if you're trying to apply it or if you think it doesn't apply. Yeah, we're still looking at different profit indicators. So if you see particular circumstances where you think a particular profit indicator is more useful than another one, if you think that there are particular profit indicators that you use uniformly and you think work for everything, we'd be interested to hear that. And what circumstances you see where there is a need for comparability adjustments, potentially in amount B, but in your cases. So if you uniformly use comparability adjustments, we're interested in why you think you need to do that. If there are particular circumstances where you think comparability adjustments are useful over other circumstances, we're interested in that. And we have a more specific point in the consultation document around transactions with multiple related party suppliers. And we're interested in your views on what we've said in the consultation document there around use of allocation keys. So any and all comments welcome, but there is a list of questions in that consultation document where you can really help us to just tweak and finalize and set the borders on the pricing solution that we're looking at the moment. So thank you, and back to Akim.
That's right. Thank you, Deborah. I think I have a short slide, not a lot of bullet points here. I can still talk a lot to one word or two. Next steps here briefly, and I think we have a Q&A session. We originally thought we cut it off at 5:45. I think we go a bit longer here. I hope you found this useful, getting a sense of where we are, framing the paper a bit and helping you navigate. Thanks to Kalale, Manuel, and Deborah to walk you through here. Next steps here, in particular, as it regards amount B, I think send us comments. Don't just send us your comments. I can give you the private number of Manuel, so you call him anytime, not on Christmas. But no, like, reach out to us as well if you want to discuss questions, if you have questions, if you have ideas, suggestions. We can be contacted. We will also be available. Use the public consultation, as I think we are trying to convey here. I think there really is a common interest. I think countries and tax administrations, for the reason also that Kalale has described from your experience, but also more broadly, and you've seen from the FTA work that we've done and the earlier work in Working Party 6, this is a space where we want to make progress, where there's a real willingness. This is a consultation document, and that's what it means. So please help us shape the amount B, so it's the most useful for administrations and taxpayers. But the closing date, I think, for comments is the 25th of January. So please use this. Maybe then just one other point, we will also be releasing, I think, before Christmas, still one piece of amount A as it relates to digital services taxes and other relevant unilateral measures. So you shall also get that. I can't tell you the specific date, but it will come before Christmas. That's all I had on the next steps here. I think we would then have a Q&A session, at least for a couple of minutes. We have gotten a number of questions here. I think the first question we got in the chat relates to whether we think that the uptick in cases that Kalale talked about in the MAP pipeline was or is caused by marketing and distribution cases. We don't have a data breakdown in that. We have a breakdown in the MAP statistics between allocation, TP, and other cases. We think, and we have reason to believe, that a significant part of the MAP inventory is and has been marketing distribution cases, for the reason also that Kalale has described. There's sort of anecdotal indications. We don't necessarily believe that the uptake is necessarily caused by those. In fact, when we released the most recent statistics, you saw that for the first time, we had less transfer pricing cases, maybe also related to the corona pandemic. So we need to still see whether we have, just one data series, but maybe two, to see whether there is in fact a trend, and we're starting to see the corner, which of course would be very positive. Maybe then on the next question that we received in the chat here, will amount B be rebuttable? Is it a deeming provision? Linked to this, I think we put this together, a separate question from another person. How do you handle if you go into MAP and somebody doesn't accept the outcome of amount B? How do you deal with this? Is it a minimum standard? So I think trying to sort of talk to those in sequence. I mean, one, as Manuel has explained, there is still a question on which we're seeking input. Can you prove out in certain circumstances out of the application of amount B, and what should those circumstances be? So that's, I think, a question that is under consideration within the context of having the broadest possible application of amount B and trading off, again, the accuracy, the simplicity, the overriding interest in having something that works and delivers at the simplest possible way. But still, I guess, as Manuel has said, within the context of the application of the arm's length principle, we don't want to change, we don't need to change treaties and the framework. And then I guess to the extent that we have the amount B applied, then yes, that would need to be accepted in MAP. That is an outcome. And this is also in terms of the minimum standard. Amount B only works if it's two competent authorities, the relevant competent authorities that accept it. And so that is something that would have to then be accepted in MAP, and ideally it wouldn't even come to MAP because this should have already been used in the assessment function. So we should be seeing, I think, less MAP on that. Then maybe, Manuel, there was one question which maybe you have already answered in part, but maybe you can go back to this again. The question was, does amount B also cover sales agents?
Yeah, thank you, Achim, and thanks a lot for the questions. I think in terms of like sales agencies and commissioners, as I was mentioning before, it's still an open discussion whether those belong in the scope of amount B. And I think it's important to remark that it's not just because we want to make amount B narrow for the sake of having like a narrow scope. What we want to get from you is basically whether by expanding the scope from buy-sell arrangements to commissioners or sales agencies, do we need to come up with a different amount B pricing solution, or do we need to come up with adjustments to the comprehensive amount B pricing solution? And if so, what are those adjustments? And we perfectly reckon that in practice, there are manners in addressing differences between sales agencies and buy-sell distribution. So we are very much eager to hear from you on that. And Achim, if you allow me, I see a couple of other points in the chat. I'm just gonna say a couple of words. One of them, a very good one about the use of variance ratio when it comes to pricing in scope transactions. So you'll see that in the document on the pricing space, we have a number of options related to different profit level indicators that could be used for amount B. And again, we are looking forward input on that one. But the idea, and I guess the question is coming at this, is like, even within the definition of baseline marketing and distribution activities, there is still a wide spectrum of functional intensity, and maybe we need to do something beyond the usual application of operating margins, for instance, and exploring additional profit level indicators to make sure that different business models are actually remunerated in line with the principle. There's also a question about, and Achim, you touched upon this before, which is, there's a lot of discussion in the document about how amount B simplifies pricing, but how amount B is supposed to simplify the delineation of the transaction. And I think that goes to the point of like the scoping criteria are crafted with the idea in mind of being simple enough to provide that tax certainty and to help in the space of reducing disputes there. And finally, there are a couple of points related to the interplay between amount A and amount B, and I think that's probably a point to take forward. As everyone knows, like amount B, amount A form part of the same package, and the idea here is obviously once we design amount B and we have a full-fledged solution, then we can see the implementation. But one point that Kalali was making it clear before as well is that the scoping criteria applicable to amount A in terms of like revenue and profitability are not applicable to amount B, which intends to apply more broadly.
Thanks, Manuel. Then maybe we have some more questions also in the chat, and maybe Kalali, you can speak to those. The first one is, when do you expect that the rules of amount B will be applicable? And the second, would you envision a wider applicable of the rules amount A, i.e. beyond the scope otherwise applicable in Pillar 1? So if you could respond to that.
Thank you, Akim. So yes, we're targeting 2024 for Amount B, and the idea of Amount B is to simplify it both in application as well as implementation. And we know that for Amount B, it can actually be implemented with the current framework. So there's no need to actually renegotiate treaties, for example, bilaterally or multilaterally, but rather when the rules are actually agreed upon, they go into the transfer pricing guidelines and countries can then apply them. And on the second question, wider applicability is actually the goal of Amount B. So unlike what we have with Amount A, where we have the revenue thresholds of the countries that would actually fall in and out of scope, for Amount B, those thresholds actually do not apply, but rather it's specific to who falls into the scope with regards to this marketing and distribution function. So that means that it actually has a wider applicability, and that also answers the other question that we've also seen in the chat with regards to wider applicability. So this is what we envision for Amount B.
And then I think we have, at least we have time for one last question. And like in the pricing discussion, Deborah always has the last word. So maybe one for you. Are the rules to be agreed, are they likely to be supported by the majority of the governments of the inclusive framework? So that's one for you. And if you want to pick up anything else that we still see in the chat, Deborah, then we give it to you, and we take this as the last one also, because we're getting very close in terms of the time.
Okay, thank you. In short, yes, we do think that these rules will be agreed by the vast majority of governments in the inclusive framework. It's very much a collaborative process with the tax administrations that we're running, and lots of these questions that are coming up and that we've put in the consultation document around where the scope lines should be drawn and which are the best profit level indicators in particular circumstances. These are the kind of discussions that will lead to the point where everyone can agree. And it's not a question of whether or not governments will agree to use Amount B, it's a question of finding the line where everyone is happy to apply it. So it will absolutely be agreed by the majority of governments, and you can have some input now into where that line will be, where it is agreed. I just saw a question in the chat about whether Amount B is suitable in cases where there is or there are changes in inflation and currency depreciations and things like that. These are the kind of factors that we are investigating in our data as country level indicators. So we're looking at all of those country level changes or country level influences that might have a correlation or even an influence on profit levels in companies in those jurisdictions. And we will absolutely be looking to find a solution that applies as broadly as possible. And that might mean that we use those kind of factors to place a tested party in a range, or it might mean that we need to have a different range. The other point about that is that this solution will be refreshed regularly. So we won't be looking to have an answer that applies long term. We'll be looking to have a methodology to get an answer that applies, and then the answer will be refreshed, just for those very reasons that things change.
And so I think with this, we're coming to the end. We thank you for your participation. We hope this is useful. We hope we gave you a sense of where we are. Please do reach out, be in touch. I think this is a very important part of this overall project. As you've seen, it has a long history. So we plan to land it in the year. You also see the timeline, so aligned with A. So we'll be busy in the run up to Christmas and beyond. So with this, I will leave you also on part of the team, wishing you a good festive season, and thank you much for tuning in, and speak to you soon, and all the best to all of those listening. Thank you very much.
Thank you, everyone.
Bye-bye.
Thank you. Bye.